All right. Welcome back to Real Estate Without Borders. I'm Dave Hutch, and I'm here with legendary Daniel Foch. We're already into charts and graphs. We have one of the hottest real estate reports of the year, the UBS Global. Oh, I took it away. The UBS Global Real Estate Bubble Index for 2024. We're going to be covering our housing bubbles popping, or are we just in a temporary correction? Daniel Foch is going to read this report for you so you don't have to. I just stole your line, buddy.
Yeah, that's good.
Sorry about that.
Yeah, I've already spent a lot of time reading this report. It came out like Q3, maybe early Q4 last year, October, I
Obviously.
think. Yeah, always August. Yeah. So it's a little stale, but I would say most of the conclusions in it are true. And we'll cover this when it comes out again later this year and see what's happened with all these markets. But some really interesting conclusions. I think the city in the world that has the highest risk of a bubble might surprise you. So stay tuned for that. But
So this comes
I
out every quarter.
no, it comes out once a year. Sorry, yeah.
Ah,
So they do like 20. They'll do a 2025 edition. And honestly, I would say a lot of people question the um, correctness of the report,
why
but
is that?
I don't know. People like to complain. Fuck, you've seen our Twitter comments or whatever, YouTube comments.
Fair enough.
Like,
Just so you
yeah,
guys are aware, this report is like how many 4,800 pages. So you're welcome
it's a
in
big one, yeah.
advance.
But I think that I think people think that it's like shilly and like try. But look, here's my understanding of its track record based on the markets that I know well. It called Vancouver's bubble in 16. It called Toronto's bubble in 17. Right. It
Right.
called Toronto's bubble again in 21. So right now it has Miami at the top of the global bubble risk rankings. Toronto, Los Angeles, and Geneva remain in elevated risk territory. And European cities, Europe is actually evolving as like I'm starting to get some buy appetite for myself personally for Europe right now. I think like it says here Frankfurt, Munich, and Paris saw major price corrections, and
Yeah.
Dubai recorded the biggest risk increase over the past year. So
I'm excited to cover
anything
the
stand
Dubai
out to you
part.
there?
Yeah, the Dubai is crazy because obviously, I mean, as a realtor, we see Dubai all over our social media. I think it's one of the probably the more talked about cities on social media. I think a lot of realtors that maybe have left Toronto have started doing a Dubai thing. But it's cool to like really dive into the numbers because most people really hear about is just like super surface level numbers, right? So to actually dive into it, I think it's really cool. And honestly, Miami being at the top, what was the stat? The prices have increased over 50% since 2019 or something like that.
Yeah, yeah, like pre-COVID, basically. I mean, it makes sense. Like Miami, I get it. It's just everybody knew that that party was going to come to an end. Like there was tons of cash piling into it during COVID because everyone in the world was going there because it was literally the only place on earth that didn't have a lockdown. And then,
And Mexico, Tulum.
yeah, there you go. And then shortly after that, I think that momentum kind of gave it the next 2 years. Then like
Right.
after that, people were like, "Oh, prices went up so high in Miami. Everybody wants to live there now." And then the next 2 years, people kept piling on with everybody late to the party, right? Oh yeah, it went up 10% last year. It's got to go up 10% this year. And then the U.S. is really good at building, right? They're very efficient at building to meet market demand. So Miami's seen a lot of construction. It's actually seeing contraction in population now.
I think that
And
actually, sorry to cut you off. I think that
yeah,
happens a lot. And not to always bring it back to Tulum here, but we saw the same thing. I think the original investors that came in, same with Miami, right? The original investors that got in, they made their gains and they did well. But it's usually the nervous investor that sits and waits, and they're the ones that kind of pay the price because they're sitting and waiting for so long that they already watch it do its thing, and then by the time they invest, it's already too far gone. It's like that nervous investor that gets kind of hurt in these markets.
yeah, I think what is it? Scared money don't make money, right?
That's right.
And honestly, dude, like I've been a scared money guy. I'm like the king of scared money dudes. But like honestly, man, I am like the little bear king. But the truth is, like I just use that as like I think some people say, okay, I'm fully risk off and I'm not going to buy anything. Whereas the truth is, if you see risk in the market, that's just a sign that you need to manage the risk away and
Right.
control the variables that you can control and understand the variables that you can't control.
Right.
I think overbuilding is a bit of a thing that like happens kind of as the whipsaw effect. Like a lot of those people who bought, maybe let's say Miami had a 3-year run, right? So year one was if you bought year one, you probably still got some padding. Year two, you might be at risk. You bought year three, you've probably lost equity, right?
Right.
As it comes down. Um, that tends to happen in a lot of these markets. You get like, and it's just like stock trades as well, right? People pile in and it gets overbought, and then the value corrects, and you wipe out some of the weaker buyers that shouldn't have been there.
Right.
Yeah, let's
But the
go ahead.
overbuilding, the one thing I noticed when I was going through this is it seems like overbuilding was a very common topic everywhere. Not
Hmm.
everywhere, but most
Yeah,
places, you know? Like we're seeing the same thing in Toronto, right?
yeah, yeah.
Which is interesting.
It's funny because everybody thought Canada had this structural undersupply of housing, and now all of a sudden we're like, oh, what's happening? We have too many houses. Vacancy
Right.
rates are rising, and it's like, oh, well, maybe this is because we measure the price of houses with dollars and not immigrants, right? Like
Right.
honestly, like everyone's like, oh, there's so many people moving to Canada. It's like, well, what do we measure the house prices with? Dollars, right? So it doesn't matter how many people move there if they have no money. What matters is how much money all of the buyers in the market have. And
Right.
that's why credit drives markets, right? And right now we're seeing a global credit contraction. And that's why we're seeing all of these corrections. So talk to me a little bit about how housing affordability plays a role in that.
For sure. I think I'm gonna get you a hat that says scared money. I think I like that.
That's a good one. Yeah,
I want to coin that one.
that's
Housing
good.
affordability. So
It's
right
got to
now,
have like a the ghost emoji on it.
starting a merch already. Episode, what is this? I don't even
Yeah.
know anymore.
Can't wait to sell one shirt to like my mom.
Our 3 listeners.
Yeah.
Hope you guys buy it. We'll make you a good deal. All right. So as of right now, or actually that's not true. So buyers can afford 40% less living space than in 2021. That's crazy if you actually think about that. So home prices in major cities remain decoupled from local income. Well, you just talked about that, right?
Yeah. Yeah.
Um, it's the
Yeah. Like,
affordability,
well, at the end of the day, what really drives prices up is the ability for local residents of that economy to earn a wage and pay their mortgage or rent in that market.
right?
Right. So places like Hong Kong, Paris, and London, it takes over 10 years' salary to buy a 650 square foot apartment. I think
Crazy.
that's just to save for.
I was gonna say that might be the down payment. What's the number in Toronto? I'm gonna pull that up while you're scrolling.
Yeah, it's on here. It's on here. I'll pull up the chart. Toronto's not that bad actually. Toronto's I think Hong Kong is like it's like 30 or 40 years. I'll find it. It's right here. Number of years a skilled service worker needs to be able to buy a 60 square meter, or which is a 650 square foot flat near the city center. Hong Kong, 21 years it looks like. Toronto is like kind of middle of the pack, right?
Right.
Toronto's like, well, even close to the bottom, 5 to 10 years. So the worst ones from top to bottom: Hong Kong, Tokyo, Paris, and being mindful, like Hong Kong is worse by like a massive margin. Um,
Crazy.
Tokyo, Paris, London, Tel Aviv are all the same. We've got Singapore, Sydney, Munich, Sao Paulo. The first U.S. city on that list is New York. So everything that we just mentioned is less affordable for workforce housing for local people trying to buy a house than New York City, as an example.
Crazy. What's the first Canadian city or the highest? Vancouver.
Vancouver's
Yeah.
two below New York. Yeah, so it goes New York, Zurich, Vancouver.
Crazy.
Yeah,
So interest rate hikes make homes 40% more expensive, obviously. So let's use a $500,000 mortgage at 3% would cost around $2,100 a month. Now at 7%, that jumps to 3,300. It's a big jump. It's a big gap. I can speak from experience. I took a variable in Toronto on my primary residence. I started around 1.6. Now it's around, but it went up to 6.5%, and it jumped significantly. A lot of people can't. That's crazy. But I think where that's leading people to is away from home ownership and to renting, right? And that's why we saw that in that percentage in the U.S., where I think it was 24% of buyers in the U.S. are first-time home buyers. That's it. Only 24%. That's
yeah,
crazy.
yeah. Home buying sentiment in the U.S. has fallen off of a cliff. If you look at this chart that I'm about to pull up here, Goldman Sachs Housing Affordability Index shows continuously decreasing affordability. Right?
Since
It's
when? 2020 been dropping.
yeah. Yeah. And this is all just from mortgage rates. It's literally as bad. Housing affordability is literally as bad as it was before the global financial crisis.
Well,
So
it's like, okay, so home prices, let's say in some of these cities like Miami, have risen 50%. And while the wage has only really risen, what, 15-20%, it just doesn't match up. It's not,
yeah,
the math's not mathing. You know
no.
what I mean?
Well, yeah, and so Americans can't afford to buy homes, and realistically, to make the U.S. real estate investment thesis make sense, you need the marginal buyer to be bidding up homes, right?
Right.
You need the first time home buyer to be driving demand in those markets, and
I
they're
think
not right now.
that's who, like, again, just from trading in Mexico and trading in Toronto actively, like you just said, I think the people that are paying the premium, it's not the investors. The investors aren't the ones coming and paying the premiums because it's a numbers based only investment, right? Where the first time
Oh,
home buyers
dude,
have such an emotional attachment to this, where it's like, usually when I go into any sort of offer, I got an offer going in today for one of my clients in Toronto, and it's like pre-offer, there's already 2 offers registered.
right.
I've set the expectations on, okay, what is your max before you get emotionally into this? Because emotions play a huge role, and like you said, significantly further for first time home buyers.
Yeah, dude. I have gone off on this so many times because people are always saying, "Oh, investors ruin the housing market," and I'm like, "Okay, there was a period of time when speculators, not investors, ruined the housing market, right? People buying because they felt the prices were going to go up." But by and large, at least in Canada, which is a really good example of a market that is detached from fundamentals, first time homebuyers are 50% of your buyers. Okay. First time homebuyers have never bought a house before. So there's a good chance they're not going to do a good job at it. Right. Let's be fair. Right.
It's pretty accurate.
Right. Like, honestly, it's like, hey, like, let's put the
Coupled with the
novice team
realtors.
against yeah. Like, and so exactly. And so they've also they're younger. So they're probably working with some realtor who did 1.6 deals last year.
Right.
Right. And so they're more likely to overpay. They're more likely to be irrational. They're more likely, they have a qualitative incentive. They have fear. They have FOMO. They have all of these different things that are incentivizing them to pay more money than they probably should for the home. So
Right. Uh,
honestly, man, that marginal buyer is who sets the market up or down, by the way. Like,
I agree. I agree 100%. I see it a lot. I still work with a lot of first time home buyers. I think their rationale behind it, I think with a lot of the younger first time home buyers, is they're looking at this as a place they're going to be spending a lot of time. So to them, they rationalize that overspending with time, which isn't the way to do it, but hey,
yeah.
it is what it is. So, okay. Rents have outpaced wage growth in most major cities, rising 5 to 15% in 2023 alone. Housing shortages fuel rent increases like Vancouver, Madrid, Zurich. Um, Now, this one actually I wanted to get into with you, and this is off script, as you might say. Now it says short-term rentals, Airbnb impact supply. So in tourist-heavy cities, investors are turning to long-term rentals into short-term units, removing inventory from local residents. I don't agree with that.
I mean, it's definitely a factor. I just don't
For
think it's as
sure.
big of a factor as everybody wants to make it sound,
I
right? Like,
agree.
yeah,
I mean, look, in Toronto specifically, it's very difficult. There's very few legal Airbnbs that are allowed in Toronto. Um, I, I think it's the same in Vancouver. Can we fact check that?
yeah. Vancouver did a ban as well. BC, I think, did. Most municipal and provincial jurisdictions in Canada have done some sort of regulatory hurdle for short term rental.
I think it's just a scapegoat. I don't believe that the short term rental Airbnb supply has like a massive effect on this. But you know, it is
Yeah,
what it
I
is.
would say I agree. I think that I don't think, like, I think house prices can be set at the margins because it transacts slower. I don't think rents can be set at the margins, and because it's a much higher turnover product, and to say that, like, yeah, okay, it pulls a little bit of supply out, but it also that was during a period of time like when the microscope was really put on Airbnb's impact in the market. It was during COVID when everybody was doing
Right.
staycations. You couldn't freaking fly half the time. So it's like, oh, yeah, of course it's going to look like things are going to look a little bit more damaging when you've got half the population of the world working from home and moving out of their downtown condos and living in nice places all over the country. Like,
Right.
yeah, obvious, it wouldn't surprise me to say that that had an impact, the same way it is when all of these digital nomads move to the Portugals and Spains of the world, or Tulum, like we're
Right.
describing, right? So
Right.
I guess we'll use that to kind of segue to the housing shortage factor, where they talk about rising rents kind of keeping markets afloat. So the chart that we just mentioned, the number of years a skilled service worker needs to work to be able to buy a flat near the city center, they have another one where it
Pull
shows
it
a
up,
price to
man.
rent ratio. I'm going to pull it up. You can count on me to pull the chart up. Don't worry. I will never miss a chance. Again, last episode we recorded, I was really disappointed in my chart pulling.
Yeah,
So
let's get double the charts in this one.
I
Oh,
got
look at this.
the great chart. So same,
Wow.
so same, same chart, but this is the number of years the flat of the same size needs to be rented out to pay for the flat. And so this is basically like, it's like a derivative of your cap rate. And we're going to dive into the cap rate and kind of like different ways to analyze properties in one of our next episodes. But the reality is, you look at a place like Vancouver or Sydney, it says prices dipped, but a lack of new construction is continuing to push rents up, right? Both of those cities are also seeing population growth.
Right.
You know, taking this list from top to bottom, you've got Zurich and Munich at the top, so both European markets. I think Germany economically is going to get smoked in
Yeah.
this recession, this global downturn. Then you've got Tel Aviv, Geneva, another Swiss city, Hong Kong, Frankfurt, Tokyo, Sydney, London, Paris, Amsterdam, Vancouver, Stockholm, Milan, Singapore, Toronto, and then you finally get to Boston, the first U.S. city, Boston and L.A.
Wow.
And then you get Warsaw, Poland, and New York City. So for comparison, Boston, LA, and New York are in the lower third of the list. Everything listed before those on a price to rent basis is basically a better investment.
Yeah.
Or a worse investment for a global city than your New York, LA, or Boston. So these are the world cities. This kind of reads as like your who's who of like, these are your trade hubs of all of those countries. So I guess it's safe to say probably from a investment perspective that if we're buying real estate outside of the US, we might not be doing it in one of these global trade hubs.
Yeah. Well, we cover a couple of these in the episode, which is good too. But that's cool.
Yeah.
That's a cool chart, actually. Hey, send that to
Yeah,
me.
I will. I will.
So can you do a voiceover actually, so I can just put it on my Instagram?
Yeah, the
If you
green
don't
screen
mind.
it for you. Yeah, for sure.
Thanks, buddy.
Here's Dan. You just do you just do your hook.
Yeah.
Check out this cool video I found.
Me in the other corner just pointing at you, nodding about giving facts. Should we dive into maybe some key cities here? I think
Let's
we
do
wanted to
it.
touch
We'll
on. We touch on.
finally talk
Yeah.
about who won the bubble race this year.
Who was number one 2023?
Toronto. Yeah, it was Toronto last year.
Crazy. And we're done. Pull up the first one again. Now we're down to what?
I gotta check if we go to the actual
okay.
rankings.
I'll dive into.
I'll pull it up.
Yeah, pull it up, man. I'll dive into this right as we get going here. Oh no.
There it is, right there. Yeah, Toronto's fifth now.
Oh wow.
We're down. Yeah,
We're down.
Yeah, it might have been Zurich, or I'll pull it up. I'll pull up last year's. I have it on my computer here.
That's all right. We'll cover Zurich in this one, but let's start with Miami, the winner, number one. We can tag team this one. But so as we kind of touched on before, so prices in Miami up 50% since 2019. I think it went through that like ultra like wealthy buyers like fueling the demand there. Everyone wanted to live in Miami. It was kind of the cool thing to do, especially during the pandemic, and then a little bit after. Insurance costs, which are something that maybe we should cover, climate change, which I don't know about that, and new condo regulations. I've heard so many different rumors about insurance costs in different spots of Miami and what it costs to actually have that home ownership with insurance. Do you have those numbers? Is there a chart you could pull up with that, or just off?
Yeah, I can probably pull something up. Yeah,
or
give me a minute.
in the back of the old noodle, you got those numbers laying around somewhere.
But yeah, I mean, like insurance is an input, right? If you think about running your real estate business, right? If you're a real estate investor, you have like, it's like any other business, you have costs, right?
Right.
And these are the costs that you have to pay to produce a good of a rentable place for a business or an individual to occupy. And so if your insurance cost is going up, that can very quickly eat away at your margins, right? The other bigger risk is that your place just becomes uninsurable, and now all of a sudden your lender calls the deal, right? Or calls the loan on the deal, because in a lot of cases, part of your covenant on a loan around the world is that you need to have insurance on the property. So if the house gets leveled, the lender still has some value left in it, right? And so if all of a sudden you can't insure the property, then your lender is less likely to want to lend, and you might be have an issue with renewal on that deal.
I'm just crunching some numbers over here. General averages. I got this. Well, according to Grok too. For policy, let's see this, for a $150,000 house it'd be about 8,600 per year. For a $300,000 house, about 15,000 US dollars per year. For a $450,000 house, that's $22,000 per year. That's high.
Yeah. It does make you wonder whether or not it's actually like, if that's a factor, like playing into the viability of the market. Like,
Right.
um, I got a couple of charts I got pulled up here, but so it says, so this is from 2024 in Southwest Florida, high home insurance rates are driving away would-be home buyers. And the chart basically shows the Florida premiums versus US premiums. Wait till I show you this chart. It's sick. You're going to like it. It's super Canadian because it's got a hockey stick on it.
Oh, I love it.
Yeah.
So what's that? 22,000.
So this is the article. In Southwest Florida, high home insurance rates are driving away would-be buyers. And there's your chart. Homeowner policies surging in Florida.
Wow.
Yeah. So they've gone up from basically your US insurance premiums have gone up, or insurance policy rates have gone up. I don't know, maybe 50% over since 2020, and Florida's gone up. What is that? Probably from $2,000 to $6,000. So 3x,
Well, like
300% increase.
let's say for a $400,000 house, that means it's almost a $1,800 a month insurance payment alone.
Yeah.
That's
Yeah.
crazy.
Yeah. And their home insurance rates are rising faster than any state, nearly triple the US average. And you can see this. Florida leads the US in home insurance premium hikes. You got Florida and then Nebraska after, random.
Nebraska. Colorado.
I guess is Nebraska Tornado Alley? I don't know.
Let me find this out. Nebraska.
And then shows 70% of Florida homeowners have seen rise in insurance costs or changes in coverage.
I'm currently
nearly 3 in 4 Florida homeowners have seen insurance changes in the past year. So
Nebraska is a part of Tornado Alley, if you were wondering.
There you go.
You're welcome. Amazing.
Yeah, so I think, a couple of other factors that are mentioned here. So obviously insurance is a big piece. The other piece is investors are dominating the market. The 30% of my Miami home buyers in the last 2 years were investors or institutional buyers, which means price stability depends on rental demand, not local wages. So it kind of gets detached from the wage side of things there, right? Should we jump over to Toronto and Vancouver, quickly blow through those?
I would love that.
Yeah, so I mean, they acknowledge that Toronto and Vancouver are still high risk, but they feel that they're subsiding a little bit, like because the markets have both come down there. They have prices down by 10% in real terms since 2022. I would say it's probably a little bit higher than that in real terms. Real means adjusted for inflation, by the way. So inflation was pretty hot in Canada, and prices did come down more than that. Prices came down more than that in nominal terms since 2022 peak, probably down about 15% in both of those markets. Sure. You adjust that for inflation, they're probably down about 20% in real terms. So Toronto is still labeled as elevated risk, and Vancouver's at moderate risk. Rising rents are keeping investors engaged. And once the Bank of Canada starts cutting rates, there is a chance that, we're already starting to see some demand coming back in. I think that, Trump tariffs, we discussed it in another episode. There's a lot of economic headwinds for Canada to deal with. I don't think it's purely about rates right now.
I think I have seen an uptick a little bit. Maybe it's just me, but to be truthful, I've seen a decent uptick in buyer activity over the last month for sure in Toronto, and especially for condos. Last year, even a decent, the condo had to be perfect for it to sell. Now it's like anything that's larger. I think this is the natural evolution of what happens, and correct me if I'm wrong, but when the prices drop, typically people are looking to get deals, right? So they're going after the homes, the freeholds, because those freeholds went from like 1.5 to, let's say, 1.2. So people are getting in to get those deals. But then you have the condo market where if it only drops, like you said, even 10%, 12%, it's really not as big of a deal to certain people. So the condo market's been struggling in Toronto, but it's the bigger well laid out floor plan units are selling decently right now.
Well, and who are you seeing the buyers being? Like first-time buyers?
First-time buyers.
Yeah, man. That's what I thought. I figured that would happen. I thought first-time buyers would come in and save the condo market. Yeah. And they seem to be. I still think there's downside risk in the condos, but like you're getting to the point where, look, Toronto's one of those cities where first-time buyers basically have not been able to afford a home for a long time. They probably feel like they're never going to be able to afford a detached. They're seeing condos getting absolutely decimated, down like 20% probably off peak. Sure. And it's like, okay, this is probably my last time to get in and get on the housing ladder start paying off a mortgage rather than paying rent. And so they're all going to buy all these condos
Right.
at pretty deep discounts to the relative value. I still think there's risk, but I don't think most first-time buyers really care, right? I think most first-time buyers are buying a house for a savings vehicle
Right.
and to get on the housing ladder and stop paying rent. Honestly, I think that's, and like they're irrational buyers in that regard, but it is what it is. Like, that's not for me to judge them. I
Yeah.
wouldn't do it, but
I think they have a lot of pressure from family too. Like a lot of the first
yeah,
time buyers that I work with, they're getting, some of their funding from the bank of mom and dad.
for sure.
And mom and dad own properties. First time home buyers aren't 20-year-olds. They're in their 30s, our parents were married with 4 kids with, the house paid off already. So there's that pressure, but neither here nor there.
Yeah.
Frankfurt.
Yeah, let's jump over to Germany. Like I would say economic setup, I think Germany's got some trouble ahead, but it seems like their markets are already correcting. So tell me about Germany.
You know what? Actually, I would say aside from Americans, my number 2 biggest client is Germans in investing in Tulum, Mexico.
Germans love real estate, man.
Mm-hmm.
They love it.
Yeah, I have quite a few German clients. They love Mexico also. No, I'm not going to ask that question. How close is it to here? Flight, Germany?
It's I don't know, maybe 7 or 8 hours.
Okay, that's far. So prices are down in Germany about 20% from the peak. Okay, so it's still high historically, but it's stabilizing. So I got a few notes here that I wanted to cover. So prices are down 20% from the peak, which could be a potential buying opportunity. However, you're seeing prices now hovering around like 2018 levels. And this is one of the steepest corrections, especially in Frankfurt's recent history, following the interest rates and the economic slowdown. I went to check out what the actual interest rates are, and I wasn't able to. Here we go. And I wanted you to scroll down here on the old script, Mr. Foch.
Yeah.
I wanted to cover this because I'm curious your thoughts on this. It's talking about how in Frankfurt, well, I guess different spots of Germany, the ECB, which is their
European
like central
bank,
right?
Yeah.
They were seeing interest rates like super low in 2018, correct? Like crazy low.
Yeah, I mean, a lot of the Eurozone did have so rates did come down like during that period of time. Remember, there was like a little bit of a mini downturn during Trump's presidency before, when they were like rates were creeping up. That's what happened in like, it was kind of the part of the perfect storm that happened in Canada too, right? Like rates got low in Canada in 2018. A lot of central banks were dropping rates in late 2017 through 2018.
I was trying to run a comparable, like an analysis from where rates were in 2016, 2017, 2018 to today, but I couldn't find the answer. But
yeah, I would say they're pretty comparable to present day. We're maybe a little bit higher today still.
Okay. So they're going through the same thing. So in Frankfurt, rents are rising despite falling prices. So the average rent per square meter in Frankfurt is 17 per square meter per month. Yeah. So a 9.4% increase over last year, which is interesting. Housing shortages, fewer new developments. I think that's global, really what's happening. So, I mean, we can't just base an investment off of rental income alone. Obviously, there's much more that goes into that investment, but rental income in Frankfurt seems to be strong. I'm not going to cover that part. Look, okay, let's get into Munich, and then we can dissect both. How's that sound?
Sure.
Oh, you got some charts?
Yeah, this is your chart that you're looking for. This is your is your interest rates back to 2015.
Okay, so what was 2015?
So
what was 2016?
15 was like one. These are your mortgage rates. So between 1 to 2.5% basically. Fair. And then now we're at like 4 in the 4s.
Okay.
So that doesn't reflect current day. That chart ends 2023, but it's come down to about, I think you'd probably be in like the 2 to 3 range, from like the 1 to 3 range. Yeah.
Interesting. So it kind of followed what Canada's doing almost.
Yeah. Look, like all of these economies kind of move in lockstep to not devalue their currencies so much, right?
Right. Then we got Munich. Munich home prices have also dropped 20% from their peak. Like Frankfurt, Munich has seen a 20% drop in property prices since 2021. Their average price per square meter for existing homes is between 7,600 euros and 8,000 euros per square meter. But with it being much higher, to closer to 10,000 per square meter in the more sought after areas. Rental prices are at an all-time high in Munich. Interesting. Average rents now about $23 per square meter, making it one of the most expensive rental markets in Europe.
I believe it.
Interesting.
Such a nice looking city, man. Lots of all like 6-story buildings. So Euro.
So
Missing
Euro.
middle.
I'd say
That's what the Americans call it.
yeah, that is beautiful actually. Well,
Yeah,
okay,
a lot of German cities have height limits, which is why their supply is so limited. Like they don't like you'll see Munich, Copenhagen, Paris. They all have limits where you could build near like the main historic cores, so that
right.
they don't completely destroy the city with blue glass buildings, like we North
I
American
was
trade
gonna
hubs
say,
like to do.
sounds like a place that we're from.
So yeah, so that honestly really like that exclusionary zoning has actually contributed quite a bit to their inability to add more meaningful supply to the market.
Okay, demand is outpacing the supply. The long-term growth potential. So the housing supply is extremely limited due to the strict building regulations you just mentioned and high land costs.
Yeah,
Um, Interesting.
for sure, for sure. So um, if you're buying in Germany, if you're an American looking to buy real estate in Germany, where would you be doing it? Given you want to capitalize, you hear these two guys talking about prices dropping 20%. You're a blood in the streets kind of investor, and you're trying to say, okay, should I buy in Frankfurt or Munich? Where would you look? I think Frankfurt may be best for value investors looking for rental income, and Munich seems to be maybe more for long term appreciation and rental stability. And again, both markets are down 20% from their peak. So
Interesting.
so
Well, they said,
you don't see these pullbacks very often, right? The entry points, let's call them.
and it says what to watch out for. If interest rates drop, the markets could rebound fast. So locking in a deal, you might be able to pay it off long term. However, short-term investors might be cautious due to continued economic uncertainty. Interesting.
Yeah.
You want to smash? I'm excited for this part, to be honest.
What's that?
Dubai.
Dubai.
Yeah.
Yeah. So Dubai recorded the biggest bubble risk increase of the year. Prices are up 40% since 2024. Sorry, since 2020. Huge supply is coming on board. There's tons of new projects being built, contemplated, pre-sold, um, and demand still hasn't dropped off. I feel like there's a lot of money moving into Dubai right now. I think people are kind of like it's part of that like anti-woke
Yeah.
kind of people are like really looking for like these new trade hubs where things are just done differently, right?
Agreed.
And I think that part of the world is really growing. Dubai is one to watch. Saudi Arabia, lots
Right.
of money and economic growth coming out of that part of the world.
Have you
What
seen
do you
that?
think?
That honestly, I just wonder when that demand's gonna like end. It seems like it's been super hot for quite some time. To be honest, it's been hot since the pandemic. And it's still going. Um, you can't really believe everything you see on social media, but from what I do see on social media, it seems like the demand is still very strong, and it's like, well, when's that going to end? I know they're big into cryptocurrency there, and a lot of the people that move there
Yeah,
are
they're taking that's why Miami's getting smoked because they're stealing all the crypto bros.
that's probably a part of it. I've heard, I've never been to Dubai, but I've heard you can pay with most of the stuff down there with crypto.
Really?
Yeah. Hmm.
You just got to sit in the store for a half hour and wait for the transfer to take
That's
place.
right. You scan the QR
Sorry,
code.
crypto bros.
Yeah. No,
Um,
it's above my knowledge base.
so yeah, so let's talk a little bit about what happened in Dubai in 2008 because I think that's like the question is this a cautionary tale, right? Because Dubai was ripping during that period of time as well.
Right.
A lot of that, yeah, you're seeing what's called a positive wealth effect. So basically, people from America making a ton of money in real estate in America, and there was a lot of American commerce taking place in Dubai. And in 2008, Dubai's real estate market experienced a dramatic crash, plummeting almost 60% in some areas. A
Whoa.
lot of developers went bankrupt, right? 60% is huge. Like that would have been
Wow.
comparable to what was happening in some of the worst spots in the US during the '08 crisis.
Wow.
And a lot of that was from stuff like we're seeing right now, speculative buying, excessive leverage, and exposure to the global financial crisis. And they actually needed a $20 billion bailout from neighboring Abu Dhabi to stabilize their economy. So the
20
question
billion
is, yeah.
B.
So what's $1 million? That's like 20 million bucks is like a car over there, man. Like like people driving $20 million cars in
For sure.
Dubai, dude.
They
Yeah.
bought with crypto.
Come on, Dave. This is global real estate. So the question is, are there differences for today and 2008? And I would say, similar to the US, they did change a lot of their regulations with the way they structured their pre-construction space and their lending space. So you now need higher down payment requirements. There's a more diverse global buyer pool rather than just like kind of pure speculation from a lot of US investors during that period of time. And I think a better, like stronger financial system and better financial oversight and transparency in their real estate transactions. So the
Yeah.
question is it actually, are we actually seeing a huge increase in bubble risk in Dubai?
What is that? They had foreign investors fueled about 85% of Dubai buyers. So
Call those Dubaiers.
the Dubaiers, zero property taxes, high rental yields, and a growing economy. I think
85% of Dubai property buyers are foreign. That's crazy.
crazy,
Yeah.
crazy.
Attracted by. Now, this is what, let's talk about what actually makes it compelling, because I get it. Like, and everyone I've talked to, like, they always make a compelling case. Like, I hear about, like, people are always trying to sell me property in Miami or blah, blah, blah place, like Tulum. I got this guy, always trying to sell me property in Tulum,
I'll get you
but
one day.
yeah, but Dubai is like, from a golden visa perspective,
For
from
sure.
like, really moving your economic life somewhere else, zero property taxes, high rental yields, and a massively growing economy, I think really makes it compelling. I could see, like, I would agree, valuation's probably a little bit high, overbuilt, yeah, potentially. But it does seem to be like a market that's just absolutely crushing it. I think the big risk there is like, it's almost like Canada in such that you can't go outside half the year.
Yeah, it's super, super hot from what I've heard.
Yeah. Like
Super, super hot.
I like a balanced, like balance. Like I like seasons,
Do you?
yeah, I don't mind it. I don't know. Like winter's not that bad, man.
Oh man, I disagree. I can't do winters, man. I actually threw out all my jackets, and I regretted it instantly because I can't go home now in the winters. Well, I can, but I got to buy a jacket. I don't want to. But what this is my only concern with Dubai. I like Dubai. I want to go check out Dubai. To be honest, I'm just jealous of all the realtors over there. But I mean, I think one of the only thing that concerns me is the oversupply. To be honest, it seems like they're building so quick. And
Mm-hmm.
again, I'm just basing this off of conversations I've had with people that have invested there or friends I know that have looked into it. I hear that these buildings are still selling out within like one of my friends here, for example, there was a pre-construction launch. He told me that he had to wake up at like 3, 4 a.m. to put his offer in, or else going to get sold out. He was like,
Yeah.
there's no way that's going to happen. He woke up at normal time, like 7, 8, and the building was sold out. Crazy. So I
Mm-hmm.
mean, if that keeps happening and that keeps up, that everyone's going there to build. I mean, you know,
I think you see a global recession and a negative wealth effect. Like we talked about the positive wealth effect, right? People in America making a ton of money in real estate in 2008, and they're like, oh, let's go mess around in some other markets around the world, and then they go and and that's positive wealth effect. Well, what's the negative wealth effect? Well, China's economy is melting down, and look at how much Chinese capital is pulled out of Canada's economy as an example, right? Canadian real
right,
estate, you can see tons of Chinese sellers happening. Same thing could happen in Dubai if you see other economies around the world melting down, which all of them seem to be trying to do at the moment.
right,
That would, I mean, 85%, like you said, right? 85% of buyers in Dubai are foreign buyers. So their real estate market is heavily exposed to the
right,
ebbs and flows of other economies around the world, and it would be massively impacted by a negative wealth effect. So if people lose money in their own economies and they need to liquidate their Dubai condos that they bought to shore up a little bit of cash, maybe to cover a bad position back home, that's how it becomes contagious.
right.
Yeah.
So let's talk about rate cuts before we wrap this up. But
Okay.
UBS predicts that rate cuts will revive demand. I'm not, what first of all, before we even get into this, I want your opinion on that because I do agree to an extent. They're saying that low rates could push up home prices back up in 2025, and like, are we at the bottom of this cycle? You know,
So from my perspective, typically real estate is one of the first things to recover as rates come down. So it's the first thing to get hit as rates go up, which we saw happen in a lot of these markets. And then it usually does recover more as rates come down. It's one of the first things to recover. That doesn't mean that it's going to start recovering immediately. I think usually as rates come down, rates are getting cut in response to recessionary environment in a lot of economies. And as you start seeing that recession kind of play out, then people are losing jobs, so they're not paying their mortgages or their rent, and now all of a sudden that's pulling values down. So there is a bit of a lag, right? As
Right.
when you're in a recession, it doesn't happen immediately that prices kind of just go up per se. But I would say they're not wrong that interest rates will stimulate demand. Right now the demand environment is horrible, so interest rates should stimulate a little bit of demand. Will it be enough to push prices back up? Probably not immediately, but eventually, yeah, for sure.
Yeah, I don't think it's going to happen overnight, but I do think again, I'm only speaking for the markets that I'm actively trading in, and I've definitely seen more activity. I've seen people with more confidence. I think when interest rates drop, I think for the average, the average or maybe first time investor, they feel a little bit more confident in the market, or they feel maybe that their money can go further, which it can to an extent. But I think the average, I shouldn't say that. I think the newer investors, they're not studying the economics as tightly as maybe a more experienced investor, So for them, something that's super crucial to them is the interest rate, because that's just putting essentially more money in their pocket when they're going to buy, right? So that's a
Yeah,
huge metric for these like newer or like the average investor.
that's a good point. Yeah, I hadn't really thought about that. Like, it will help resurrect demand for people who don't care so much about like the actual macro risk environment and really just care about like what's the cost, right?
Right.
What's the cost of owning this place for me? That's a good
It's like
point. I hadn't really thought about that.
when I have you're too smart, dude. You gotta
Yeah,
come down to my
overestimate
level,
the
okay?
intelligence of the average buyer.
Come down to my level. Like but the most of the conversations that I have, I like to think of myself as fairly educated, but when I bring up these like economics or macroeconomic, type conversations, I can tell that most of the either first time home buyers or like a new investor, they don't think about that. Their one main metric is, what does this cost for me right now if I buy this at this interest rate? And a
Yeah,
lot
because
of
people buy
buyers,
payments.
people buy payments, and I think a lot of people are looking at like people want to do what other people are doing. So when there's more buyers in the market, more
Yeah,
people feel comfortable buying, because it makes them feel like, okay, if they're buying, I'm buying. This feels right. I feel like I'm doing the right thing. Whereas if nobody's buying and you have some realtors being, telling you it's a good time to buy, then you kind of feel like it's maybe a scam. This
right.
is how they think. But that's
Yeah.
my
No,
my
it's
take, man.
I'm never like exceptionally well in touch with the like consumer psychology because I don't have any emotions. So like it's hard for me to like really understand how
I'm a
people
big
feel
emotions
about this
guy,
stuff.
man.
Yeah, you're
Big vibe
really
guy.
like just yeah. I mean, you
So,
live in Tulum, right? You wear linen and ride your dirt bike around.
dude,
That's
you
what I would
know,
expect an emotions guy to be.
that's right. I'm in tune. It's very high energy here in Tulum. I'm in touch with it. I wear no shoes sometimes in the grass just to
Oh,
be quiet.
grounding? You're a big grounding guy?
Just
Freaking love grounding, dude.
but it's very common here. I can't do that, man. My feet are fragile. I can't be wearing no flip flops around
You
here.
just
I'm just
gotta get a
wearing gloves.
grounding sheet for your bed. I'm not joking, dude. I have one of those. It's sick.
No, you don't.
Yeah, man. So I got in a bad car accident in like 2019, and I have like really bad like upper back pain from it, like whiplash and whatever, like brutal. Like you'll notice I'm like always like moving my neck around when we're recording because my neck's like just fucked, dude. It's like in a lot of pain. And the only thing
It's
that
not
like
funny. I'm sorry.
significantly reduced, no, well, it was whatever. It's funny in the context of the
Yeah.
conversation. And the only thing that has like really significantly reduced the pain is freaking grounding. No joke, man. I watched the Amazon documentary and I was like, this is total bullshit. This cannot be true. And then I tried it and I was like, what is happening right now? This
You
is
actually
the
feel better
weirdest.
from this blanket or the thing.
Yeah, yeah. I
Send
mean,
me
I
the
do it
link.
like I'll just yeah, or like I'll walk outside. Is this our first affiliate pitch on the show right now?
Put the Amazon link up here.
Yeah. But no, like if you just go walk around with your feet on the ground, like if your like legs are sore after a leg day, like just literally go and sit on the ground for like, I don't know, like go take a nap, lay on the ground and just take a nap.
Does it have to
And
be on grass?
no, it's as long as it's not like it has to just be conductive. So it could be like rocks, sand, grass, water. Like if you go in the ocean, it's
Oh
even
yeah,
better. That's
yeah.
why people love standing like swimming in the ocean.
So
It grounds you, man.
did you know that this is Tulum? Most of Tulum is on top of cenotes. Okay, so like there's tons of water underneath of us. Like most of the developments here, they don't tie into city water because they have cenotes underneath with like unlimited water. Well, not unlimited, but a lot of
Right.
water. But that's why the energy, they say, in Tulum is so high, because there's so much water underneath. So I got to do some grounding after this.
Go do it, man. You'll feel way better if you're sore. You just know, pay attention. Like, pay attention to your pain level before and after. And I'm curious for you to report back in our next
I
episode
was gonna say
how it
I'll
was.
report back.
Okay. I think that's it. We got anything else? I think we're good.
I think that's it.
Okay. Thanks a lot. Please send this to your mom. Share it with all your friends. Like, subscribe, comment, whatever the kids are saying these days. Smash that like button. Do a TikTok dance. Whatever. Just appreciate you listening. Keep doing it. Yeah.